You know, if you're like me and you're seeing all these headlines about AI just exploding and you're wondering what that means for your investments,
Right.
especially like in the data center space,
Yeah,
um, you're in the right place.
absolutely. This is where it's at.
We're diving deep today into some recent perspectives on this whole AI data center build out.
Okay.
We're seeing some warnings about a potential bubble,
Interesting.
and that the whole like AI buzzword momentum trade might be kind of losing some steam.
Yeah, yeah, I'm seeing that too.
So we've got some great insights to share with you today,
Okay.
from Alibaba's Joe Tsai and NYU's Aswath Damodaran.
Two heavy hitters.
Yeah, so
Right.
so our mission for you today is to kind of unpack what they're saying and help you as an investor
Yeah.
understand what the risks might be
Hmm.
and what the shifts in the AI investment landscape could be.
Excellent.
So let's start with Joe Tsai,
Okay.
who's the chairman of Alibaba, and he had some pretty strong warnings about a potential bubble in data centers.
Uh-huh.
So what's his core concern?
Well, you know what I find really interesting is
Yeah.
he's saying that, everyone's building these data centers
Right.
at this incredible pace, but that might actually be outpacing
Oh.
the immediate need for those AI services.
Oh, so it's like we're building them, but nobody's actually using them yet.
Yeah, and that's a key insight for investors.
Yeah.
Rapid billing doesn't always mean rapid returns
Right.
if the demand isn't there.
Right. And he used this word indiscriminate to
Yeah.
describe the way some of this construction is happening.
Right.
It sounds like he's seeing a lot of building happening without a clear pipeline of customers like ready to go.
That's a huge concern for investors, right? Because if you're building all this infrastructure without knowing who's going to use it,
Yeah.
you got to wonder about the long-term viability of that.
And he was really struck by just the sheer scale of investment in the US. He talked about being astounded by the planned spending in the
Really?
US tech sector. He threw out figures like $500 billion, several $100 billion.
Yeah.
It's a lot of money.
It's a ton of money.
So for investors, that should be a pretty big signal to pay attention.
Absolutely.
Yeah.
And you connect this to the bigger picture.
Yeah. Yeah.
Tsai is suggesting that this current level of investment feels significantly ahead of the actual demand we're seeing for AI capabilities right now.
Oh, so it's like we're betting on the future, but the future isn't here yet.
Exactly. And that oversupply risk, that's something investors really need to think about when they're looking at companies in this space.
Yeah, so where's all this money going?
Right.
Like we hear about these huge CapEx commitments from, the big players,
Right.
Amazon, Alphabet, Meta.
Hmm?
They've reportedly got a combined $175 billion committed this year,
Wow.
largely for data centers.
It's incredible.
And then there's that Stargate project.
Okay.
That's a collaboration between OpenAI and Microsoft.
Right.
That's rumored to be a $500 billion data center undertaking.
That's just mind-boggling.
I mean, these are huge numbers.
It really highlights the financial bets that are being placed on this future of AI.
Yeah, and it makes you wonder if U.S. investors are starting to feel a little uneasy about all this.
Yes.
So I mentioned that there could be a shift in sentiment as investors watch these more cost-effective AI models coming out of China.
Uh-huh.
So that's another dynamic to consider, right?
Absolutely. The possibility of, getting similar AI performance,
Yeah.
but at a lower cost,
Right.
could really impact, whether we need to be building all these data centers.
Yeah, investors might start to say, hey, wait a minute.
Right.
Why are we spending all this money if there's a cheaper way to do it?
Exactly. And that's a really important point for investors to consider. Do we need these huge capital outlays if there are alternative, cheaper solutions out there?
Now it's important to remember where Alibaba sits in all of this.
Right.
They're not just an observer. They're a major player in this space.
Exactly.
They're planning on investing over 380 billion yuan in AI in the next 3 years.
Wow.
They've got their Quen series of models. They've resumed hiring. So,
Right.
they're in the game.
Yeah, and that's important context, I think, for Tsai's perspective, because he's not just some outsider looking in.
Right.
He's a major player in AI.
Yeah.
And when he's expressing concerns about overinvestment in infrastructure, investors really need to pay attention.
Yeah, and the market reacted pretty swiftly to his comments, too.
Oh, really?
Alibaba shares dropped almost 4%
Wow.
after he voiced these concerns.
That's significant.
Yeah, it shows how sensitive the market is to this kind of talk.
Yeah, that immediate market correction really tells you something.
Yeah.
Expert warnings can have a real impact on stock valuations in this sector.
So we've got Sai raising the possibility of a bubble. Let's bring in Aswath Damodaran.
Okay.
He's got this term, the AI trade.
Right.
And he's noticing that just slapping AI or NVIDIA on something isn't the automatic stock booster it used to be.
Yeah, it's interesting, isn't it?
Yeah.
You know, just mentioning those names doesn't guarantee a stock surge anymore.
Right.
And he points to CoreWeave's IPO as an example.
Okay.
You know, the AI hype wasn't enough.
Yeah.
Investors are becoming more discerning.
And he sees this cooling off as a good thing.
He does.
He calls it a healthy correction. Why is that good news for investors?
Well, he thinks that, you know, when you're relying just on buzzwords to drive up valuations, it creates this bubble that's not sustainable.
Right.
So this shift towards, you know, actually looking at fundamentals is a positive sign.
Okay.
It might prevent a much bigger crash down the line.
So it's kind of like a reality check.
Exactly. A dose of reality.
Yeah, and it sounds like he's on the same page as Sai about these data centers.
He is.
He said collectively AI has been bid up too much.
Right.
And that includes the data centers.
Absolutely. He shares Sai's caution that the overall enthusiasm for AI might be a little ahead of where the market really is.
Yeah, and he brings up a really important point.
What's that?
Which is, you know, where's the revenue?
Right.
Like he said, he's hard-pressed to think of any company making significant money from AI products and services yet.
Right. So we have all this investment in infrastructure.
Yeah.
But we're not seeing a lot of profits from the actual applications of AI.
So that raises the question, are we spending too much on the infrastructure?
Right, exactly. And that's something for investors to think about. You know, is this level of spending justified if we're not seeing the revenue from the AI products and services?
And Damodaran thinks that this kind of sobering up moment might have started around September of last year.
Interesting.
He mentions the deep sea story as maybe playing a role in that. But, you know, regardless of the specific reasons, it seems like investors are starting to get a little more realistic.
Yeah, it seems like that initial hype is starting to fade.
Right. And then he uses this really interesting term, the bar mitzvah moment.
I love that term.
What does that mean for investors in the context of AI?
Well, I think it's this idea that, you know, like a young person coming of age, investors are starting to demand more than just promises.
Yeah.
They want to see results. They want evidence.
Like, show me the money.
Exactly. Show me the money. Show me that this potential is actually turning into profits.
Right. And he brings it back to the numbers. He says, we need to see evidence that the AI market will reach trillions of dollars to justify these hundreds of billions that are being invested.
That's a big gap.
It is a big gap.
And investors need to be asking themselves, you know, is the data really there to support that kind of growth?
Okay, so we've got Sai and Damodaran, both kind of sounding the alarm bells here a little bit. So what's the big takeaway for investors listening?
Well, I think both of them are saying that, you know, be careful. With all this investment in AI infrastructure, especially data centers, there's a potential mismatch between this rapid expansion and the actual demand and revenue that we're seeing right now.
So what does that mean for our investment strategies?
Well, I think it means we need to look really closely at companies that are heavily invested in data centers.
Okay.
You know, the AI hype might be fading. So we can't just assume that every company associated with AI is going to do well.
So instead of just looking at who's building the most, we need to look at who's actually using AI effectively and making money from it.
Exactly. Who's generating revenue? Who's showing real-world applications?
So maybe the focus is shifting away from infrastructure?
It could be.
And towards companies that are actually, you know, showing results.
I think that's a smart move for investors right now.
Okay, so the big message here is, you know, be cautious. The rapid growth in data centers is raising red flags. We might be in a bubble, and these investments need to translate into real returns.
Absolutely. The long-term potential of AI is still huge.
Yeah.
But we're moving into a period of more realistic assessment.
So here's a final thought for you.
Okay.
As you're looking at AI investments, don't just get caught up in the hype. Don't just look at who's building the biggest data centers. Think about the metrics that matter.
Yeah.
Think about who's actually using AI to generate revenue.
Absolutely.
And think about the balance between future potential and current market validation.
That's a great point to end on.
Yeah, food for thought.
Food for thought.
Thanks for joining us.
It's been a pleasure.
See you next time.
Take care.